Hi, it's Laura Gwyn, Laura Gail Gwyn Properties. Today is Monday, April 6th, and we wanted to give you guys what we had for an update, and I decided I would just go ahead and share some slides with you. So to give you an update as of today and let you know what we're seeing and what we're being told, I'm being asked a ton of questions, which they are all great questions. I thought the fastest way is to just share with you some slides that I had. I think all of us have in the last 3 weeks determined that there's absolutely no better place than being at home with family, safe. I hope everyone, each and every one of you, are safe and healthy. If you could please private message me and let me know how you guys are doing. That would be wonderful, because as you know, I care about each and every one of our clients and people that we know, and even those we don't know. If you're watching this and we haven't met formally, please private message me and introduce yourself. The review slide is that recession does not equal housing crisis. We've been talking about this at length. We do not expect a repeat of the severe recession of 2008-2009 because the virus and oil shocks are not endemic to the financial system, but are rather external. Once the virus infection rate peaks, which I'm thinking that we're getting close, we expect a recovery to gain momentum into the final quarter of the year and especially into 2021. Fortunately for Oregon, we are sitting in a better situation than most other states, and I'm very grateful for that. The home price change during the last 5 recessions, you've heard me talk about this many, many times. 3 out of the last 5 recessions had price appreciation. When you take the housing market or the market crisis, the mortgage crisis out of the equation entirely, and you only look at the 4, it just really is very calming. So please don't get too wrapped up in that, and here's why. Goldman Sachs had given us a forecast earlier, March 17th, with a V-shaped curve. Many people were contacting me, asking me, Laura, when can I start buying foreclosures? I'm so excited, I want foreclosures. And guess what, folks? I don't think you're going to see the foreclosures that you were anticipating. And the reason is because the Federal Housing Administration indicated that it is, it did enact the immediate foreclosure and eviction moratorium for single-family homeowners with FHA-insured mortgages for the next 60 days. And then the Federal Housing Finance Agency announced that it's directing Fannie Mae and Freddie Mac to suspend foreclosures and evictions for 60 days. So for those of you that were super excited at the possibility of buying foreclosures, I don't think that it's going to happen like what you were hoping for. And here's another reason. Many people don't remember. I do. I was there. In 2005, 6, and 7, people were using their homes like an ATM machine. They took $824 billion, billion dollars out of their homes in cash out refinances. And then lately, here in 2017, 18, and 19, they have only taken out $232 billion. So absolutely 0.25% or a fraction of what had been taken out of their homes previously when they were being over collateralized. The other interesting fact for those of you that have been anxious and hoping for foreclosures is to know that, and this isn't talked about very often, the total percentage of income that people have been using towards their house payment has been right around 15%, 15.5%. So only about 15% of their total monthly income has been going towards their house payment. That's also drastically different than what it was previously. The historical norm, as you can see, is about 21%. The V-shaped recovery that has been discussed quite often in the news here over the last week, we now have numbers and predictions from the top 4 money institutions, Goldman Sachs, Wells Fargo Securities, Morgan Stanley, and JP Morgan. You know, these are the people that manage trillions of dollars, the money for the richy rich. And they did predict a fast, sudden drop when they put the economy on pause. And that's what I want you to look at this as, is the economy was just simply put on pause. So they are expecting a dramatic, sharp rebound, okay? As soon as the pause button is lifted, everything's going to be going back to normal. But we do have 4 different opinions there, and so you can see, you know, some are predicting a sharp rebound, and others it might taper off into the 3rd and 4th quarter. But historical analysis showed us that pandemics are usually V-shaped. This is the sharp recession that recovers quickly enough to provide little damage to the home prices. And some very cutting-edge search engine analysis by our information management team showed that the current slowdown is playing out similarly thus far. John Burns Consulting is a real estate analytical firm. PricewaterhouseCoopers survey of 50 leaders from a cross-section of industries. When they were polled, when these small businesses were polled, they were asked, if COVID-19 were to end today, how long would it take you to be back in business as usual? You know, 2/3 said less than a month. 9 out of 10 said 1 to 3 months. And I will encourage you, for you small businesses, there are 3 activities that you need to be focused on. Safety first, keeping the business moving forward, and then building that pipeline. Because if you do not continue to build your pipeline, you're going to be operating as a startup when the pause button is lifted, and it could take you 3 months to get back in action. So be bidding jobs. Ladies, with your roots and your grow out, be booking that hair appointment, okay? Get your hair appointment on the books for the month of May in Oregon. So when this picks back up, if you were not staying current on your personal appointments as well as your business appointments, you're going to have a lag, okay? You don't want to be behind. We know that the average economic impact of one home sale in the United States is about 85 grand. Housing is a leading indicator for recovery of recessions, okay? The government is keeping their eye on this. They're taking this very seriously. Every time a home is purchased and sold, it dramatically improves the state of the economy. For the state of Oregon, it's $117,000 worth of economic impact, okay? This week's job reports, it's startling, okay? 10 million people have applied for unemployment as the economy was put on pause. The reports that you're going to see coming out, quoting 4.4% unemployment rate, please keep in mind that that was as of the week of March 12th. So it's absolutely bogus. Don't listen to it. The next one that comes out is going to be more accurate, and that's not going to come out until May 8th. So questions that are out right now is, where's the unemployment headed and how will it affect home sales? When you look at the Great Recession, you know, of 6, 7, and 8 versus today, you can see that there were gradual increases. And then here, I mean, Goldman Sachs projection of 15%, they've kind of, out of everybody, they've kind of got the worst case scenario number of 15%. But you can see that it was solely because the economy was put on pause. The major financial institutions are calling for a rapid V-type recovery, okay? Again, it's going to be a rapid recovery, and they are predicting this and preparing for it. Unemployment rates are set to skyrocket. We know this. Here are 3 different opinions. Goldman Sachs, worst case, 15%. Congressional Budget Office predicting 12%, and JP Morgan Morgan at about 8.5%. Okay, so these are peak rates predicted for 2020. This slide really isn't supposed to be out for public viewing. Steve Ratner was with the Obama administration, and when this comes out and we have the official slide, we'll be using it. But please know that if you go to my blog post at lauragwyn.com, you're going to see a lot more of this explained to you. Essentially, all of this is pretty unknown. All we have is everybody's best guesses right now, because we don't have a cure for the virus, we don't have a vaccine, and we don't have an end date. This slide on my blog post dated today, April 6th. There is a really great blog post, so please go to lauragwyn.com and look at that. Really, the unemployment rate was rising between 1992 to 1993, yet home sales increased. The unemployment rate was rising between 2001 and 2003, and home sales increased. These blue bars, these are home sales. The unemployment rate was rising between 2007 and 2010. These gray bars, those are the years during the mortgage crisis. And home sales significantly decreased. But this was because of the mortgage crisis. The unemployment rate was falling continuously between 2015 and 2019, yet home sales remained relatively flat. So really, there's no doubt that the country, we haven't seen job losses this quickly in almost 100 years. How bad could it get? We don't really know. Goldman Sachs is projecting the unemployment rate to be at about 15% in the third quarter of this year, flattening to single digits by the fourth quarter of this year, and then just over 6% by the fourth quarter of 2021. It's not ideal for the housing industry, but it is manageable. We've given you the facts that we know them, but the housing market will have challenges this year. Please rest assured. Help is being given to those that have lost their jobs, and the fact that we're looking at a quick recovery for the economy after we address the health problem, the housing industry should be fine in the long term. You can see here the gray bars, those were during the housing crash. And then of course that, when the rates were lower, it was stabilizing. In contrast to other recessions, the job cuts are the result of a calculated halt to economic activity. It says 36 on the slide, but I know the number's already like 38 states have issued stay-at-home orders affecting, which is actually now about 88% of Americans, and shutting down of restaurants, stores, hair salons, movie theaters, and other non-essential businesses that stem the spread of the virus. For market news, please go to my blog at lauragwyn.com. Articles are being written there every day. They're being written the day before they're getting posted because information is getting, honestly, it's been changing hourly. Now, I think it's more steady. It's slowing down. The last 3 weeks were absolutely insane. But it's getting more stable now. You can shop for homes, whether you're employed or not. Even if you've lost your job, please know that you're welcome to shop for homes online at lauragailgwynproperties.com. Add them to your shopping cart just like you were with your Amazon subscription. And when you have your job back and things are more stable, you can check out, just like with your Amazon purchases. If you would like to watch a weekly update that's actually for realtors, because I'm very transparent, I am sharing that. I'm hosting a watch party on Friday, this Friday, April 10th at 1 o'clock on my personal Facebook page. Because it's virtual, you're gonna have to bring your own popcorn, but please know that you're welcome to join us. Any information that I have available to me, I share with the public. So please rest assured, everything that I have access to is yours. You just tell me what you need and I'll share with you the resources that you're looking for. You guys should know how to reach me on all of our social media channels, but here is our office phone number if you're a seller and you want seller information, or if you'd like to schedule a Zoom appointment, press 1. If you're a buyer, you can press 2.